really pleased, as I said, so many people have come today. One way to encourage inclusive investing is to come together and share knowledge and experiences. And we hope that what we share today sparks more conversations, more sharing, and ultimately more inclusive investing. If you have got any questions along the way, please feel free to drop them into the chat. How we'll be covering our webinar today is really three parts. One, the first one is SEIS and EIS. We're taking the perspective of the angels for the second part of the EIS, decisions to invest and angels' time. And the third part will be about EIS and for the founders, and trip hazards and good fit investors and post-raise things to consider. And introducing our panel today, we've got Jill Jones, who's an experienced angel investor of 15 years, having exited 2 optometry businesses. Jill is now working on an ESRC funded PhD at Cardiff University, which focuses, very importantly, on gender and the decision-making process within Business Angel Syndicates. Nicola is the CEO and co-founder of Views for Change, enabling advertisers to reward the audience clicks with donations to a cause they care about, a staunch supporter of Women X founders and young entrepreneurship. I'm the founder of Newton's Theory, a team of finance directors who support businesses to grow, raise funds, plan for an exit, overcome cash flow and profit challenges. And I'm also the co-founder of Inclusive Angels, which is where we're not for profit, just come out of my passion for equality, for funding and entrepreneurship. Sarah Gardner is the founder of Allegro Tax, a specialist tax advisory firm, and is our EIS guru for today. Sarah spends a great deal of time dealing with EIS matters and enjoys accessible and jargon-free guidance in this complex area, which is really important for inclusive investing. Amina Arden is the founder of a cosmeceutical skincare brand born out of her own experience looking for a skincare range. Amina discovered a significant gap in the sizable beauty market. Amina's trademark will be coming out soon, and we'll be looking out for that, and we'll push that back out on Inclusive Angels. So if I'd like to kick straight off into what is SEIS and EIS. I'm going to launch straight into that with Sarah. So Sarah, say I'm thinking of angel investing and I'm hearing these letters. Let's start with, what do they stand for?
Well, the EIS is the Enterprise Investment Scheme, and the SEIS is the Seed Enterprise Investment Scheme.
Perfect. And what's the difference, and how much can I raise on those two?
They work in a very similar way. The main EIS scheme allows people or companies to raise investment from individuals like you and me. Yeah. And it gives those individuals a 30% income tax reduction on the amount they've invested. Yeah. And then if they hold the shares for at least 3 years, they'll get capital gains tax exemption when they sell them. Seed EIS works very similarly, but it's for much smaller companies. They have to be less than 2 years old and very small in terms of their assets. And the income tax break is even better. It's a 50% income tax reduction on the amount that's been invested, and then that capital gains tax exemption at the end. There are some other tax benefits included in these schemes, including the fact that most Seed EIS and EIS shares are exempt from inheritance tax. But realistically, the main reason that people usually do these investments is the income tax and the capital gains tax exemption.
Sorry. So if this is tax relief, what does that mean? Is that cash back from the government? How does it work?
The income tax is a reduction on your annual income tax bill. So when you do your tax return, you might have income from different sources, depending on, you know, if you're sort of employed, self-employed, you might have, you know, rental income, all sorts of things. But you would look at your income, and then you would get a reduction of either 30% of the amount you've invested for EIS or 50% of the amount you've invested for the SEIS scheme.
Okay. So some angels invest regularly and they're considered professional angel investors. Many other investors are not professional investors, myself included. Is it for us too?
It's for everybody. I mean, there's no minimum amount that you can invest. Actually, there used to be many years ago, but that was actually abolished. So it doesn't have to be for people who've got, you know, hundreds of thousands of pounds to invest.
Yeah.
It can be for, you know, for anybody really. I mean, I would say the only thing, people don't have to be a sophisticated, experienced investor to do this, but they do have to understand, you know, the fact that the reason these schemes are so good is that HMRC sees smaller companies as inherently risky. So, you know, people need to understand the risk they're taking by investing in these types of companies, but they don't need to be any more sort of sophisticated or experienced than that.
Okay. And so can I use up my first angel investment? If I've got the very first one, can I use it? Can I, even if it's a 2K investment, can I use EIS or SEIS?
You can, as an individual. There's nothing to stop you using it either on your first investment or on a small investment. The key question there would be whether the company actually qualifies to issue EIS shares. There are some quite strict criteria, but what the company can do is it can go to HMRC for something called an advance assurance, which is it's just an email that they send, but can be shown to you that HMRC say, yes, we've looked at all the company's details and we're confident that it should qualify for EIS or CDIS. So most investors would want to see that before they consider investing.
Okay. So how do I claim? What's the rules? What do I need to know if I'm going to invest and they've got EIS? How do I actually claim?
In terms of the claim, it actually has to start with the company again. So once you've put your money in, after the company's either been trading for 4 months or spent 70% of the money, then it puts a form into HMRC and it will include your details and any other investors' details. And HMRC will check everything, make sure everything's in order. And if they're happy, then they will send the company a form which it passes to you, and then you include that form when you send in your tax return to HMRC, when you do your personal tax return. So you should be looking for a certificate or form coming from the company to you that you then put in with your self-assessment tax return that you have to do every year. Okay.
So there needs to be a form coming back from the company that you've invested in.
Yeah, exactly. There's a whole lot of paperwork, but basically the company should do it. But you should be expecting the company to give you something that they've had back from HMRC with your name on it. Yeah.
Lovely. We're going to talk about angel investing and the decision to angel invest and how EIS impacts that. So Jill, you've been an angel investor for the last 15 years. Can we talk about your decisions to invest and how EIS has been a factor in that? Early stage businesses can fail, meaning angels can lose their investment. So how does EIS make a difference in that for you? Jill, you're on mute.
Sorry. EIS, SEIS are not necessarily drivers to invest in a business, but they certainly help to mitigate the risk. And I would say that most of the proposals that I see are EIS or SEIS compliant. One of the things that you just did touch on then, Amy, was the fact that some businesses can unfortunately fail. Sarah can obviously expand on this, but there is the EIS loss relief, which means that if you do lose part of your investment, you can then claim back. Perhaps you could say a little bit more, Sarah, about.
Yes, so there is an inbuilt loss relief with both the EIS and the CDIS. If the company fails, essentially you don't lose that initial income tax break that you had, so you get to keep that. So then you work out sort of what your actual loss would be, you know, after taking that into account. And then you get a tax relief at your whatever your rate is. So you might be 20% taxpayer or 40% taxpayer or a 45% taxpayer. And you look at the sort of loss you've made, and then you get loss relief at whatever percentage you pay tax on that, you know, on that amount. So under the EIS scheme, where it works out is if you invest £20,000, you end up your actual loss is only about over £8,000. I mean, say only £8,000. Obviously, it's a huge amount of money, but compared to the £20,000, you might think that you're going to lose. You know, the risk is lower than you might expect.
Yeah, that's a significant difference. So that 20k goes to the founder, but it could be 8k that you are potentially risking.
Yes, if it all goes wrong, your loss is not as high as your actual investment.
Yes. And statistically, female founders their businesses fail at a lower percentage. Statistically, I can't remember the stats. It could be 25% versus 38%. I was just going to have a look, but I won't. So Nicola, you've recently closed your raise, so congratulations on that.
Thank you.
And did you see how EIS factored into your angel decisions when you were having those conversations for Views for Change?
Yeah, it was absolutely critical, to be honest, because we pivoted from an agency model to a tech model. We needed to raise investment to get that off the ground. And I had absolutely no idea about any of these schemes or anything like that. And you see a lot of founders going out and being like, oh, we've just raised, you know, all this money. And there's a lot of paperwork that needs to be done from a company perspective before you even get SEIS advanced assurance or EIS advanced assurance. And then you can start speaking to investors, because a lot of them won't, like Sarah said, they won't even start considering investment until you've got that in place, that you can say to them, we've got HMRC have said we're ready to go. And I think probably about 70% of our investors, every UK investor has used the SEIS scheme with investments with us, and only the ones that didn't were international investors. So critical, basically, to us raising that amount of money.
So that's every one of your UK investors wanted the EIS status on it.
Well, I mean, yeah, and why wouldn't you when you listen to the benefits of it? To be honest, I would probably want that too.
Yeah. And Amina, you're in conversations with investors. You tell us what are the questions that you've been asked by investors about EIS and how important that's been for them?
Absolutely. I think, like Nicola said, it's almost the baseline question they ask is, I've certainly initially when we first started racing and we didn't have the SEIS assurance from the HMRC, it was more or less like, how about you get that and then come back to us? With some investors. Some investors I knew very little, and few pointed me to the HMRC website where I learned a bit more, but as Nicola said, for sure it helped to drive the discussions forward the minute I had the assurance coming through.
Okay. So it's a big boost for founders raising and for angels.
Absolutely. Well. I would say that.
Yeah. Okay, cool. I'd like to go a little off piste and pick one of the reasons that angels hold back from investing. So I've got a day job. I've got friends, family, kids, life, meaning that there's really not a lot of spare time. So if I angel invest in a company, how much support or time do I need to give the business? That's a key question for angels that often holds them back. And the answer is really varied. So I'd like to ask all the panel, really. Jill, can you tell us a bit about your experience and time that you've given?
Of course. I've been an angel investor for 15 years now, so through various stages. And when I started angel investing, I had a young family at home and found that it fitted perfectly with household commitments. because you can make a decision about how active you want to be, whether you want to be full-time, active, passive investor. Most investors tend to invest within a group or a syndicate. So you can have a lead angel who will take care of most of the process. And then you can just be involved and called upon as necessary for your own expertise or knowledge or involvement with the company. Saying that, angel investors are also not there to be involved, I'm sure you'll agree, with day-to-day running of the company. They bring their expertise, finances, access to networks and knowledge to the company. So you're not expected to be involved day to day, but you don't have to be involved. It's certainly not a full-time occupation, although it can be. There's very much a sliding scale with angel investing. Yeah. And if you're a group or a syndicate that you want to invest with, you trust the other investors, you work together to support the company.
Yeah. Amina, your ideal angels, what are you looking for when you're looking out for and having those angel conversations?
I think firstly, to start with, being a first-time entrepreneur, I think it's quite important to me, firstly, to have a, an angel investor that believes, in my brand and company. And I have had discussions where you can really truly feel that it makes a difference. Yeah. From the get-go, they either get it or don't, and people who really truly genuinely believe in the brand and the mission. Obviously, we are at a pre-launch, pre-revenue, so done a lot of background research, marketing data, and they can see kind of the picture, the vision and plan for the company. That's quite important. And secondly, we don't necessarily need a lot of hand-holding, as Jill was saying, but certainly, the support, the expertise that an angel investor can, opening doors to other networks, possible other collaborators are quite key, I think. So I would say a fit is a must on a both personal, but also on a, business level.
Yeah. And Nicola, how are you finding the experience now with angels on board, and how involved are they being with you?
So we have a variety of sort of types of angels, I suppose, some more involved, some less involved. And I made a point of sort of communicating with them as we were closing the raise around what sort of involvement they wanted. And then I also had an internal discussion with the team around how much we wanted to communicate and making sure that we were doing that at the right intervals. And we all agreed that a monthly sort of newsletter, essentially, to investors that would have, honest updates around what's going on, what we're working on, all those sorts of things, just to keep that communication piece going. So even if we have more passive investors, they're still kept in the loop, and they're not just sort of held out of conversations that I'm having with more involved investors. But I think, you need to have that conversation with them. If they don't want any involvement, but they really believe in the business and they want to, support with financial support, then that's wonderful. And if they want to, if they can bring some additional expertise and want to get involved, if you like just to pick up the phone or whatever, then that's great too. However, I would say you probably don't want like 20 angels that all want to call you every 5 minutes to speak to you, because from a founder perspective, that's like quite a lot. So I think having a couple of investors who are really, engaged in supporting, and then others who are happy to jump in if they've got specific expertise that can support you in whatever challenge you're facing in that particular day.
Yeah. And Sarah, do you get asked when you're doing EIS advice for people, either individual angels or founders, do you get asked about, is that a concern for angels, how much time they'll be involved, or a concern for founders about how much time the angels will ask from them? As Nicola said, some want to be involved, some just want an update.
Yeah, I think it is. But I think I completely agree with Nicola. It's about communication, isn't it? Because people are so different, aren't they? Some people are investing because they want to get involved. It's for some people it's almost like a hobby, isn't it? They want to be involved in these businesses and they want to contribute, or perhaps they've retired but they see it as a way of using their skills, or something like that.
Yes.
Whereas other people actually either, like Nicola said, they believe in the business and they want to support, or they just know this is a good thing to do with kind of some spare money they might have, rather than just putting it in the bank, and they're doing it kind of for that reason, and they don't want to be involved. So you really do get the whole the whole range. I think it is about the communication.
Yes, it's very much that. So we've talked about EIS as a benefit to the investor through setting, and then the setting up of the EIS comes from the founder. So what do founders need to know about EIS? Because that's the work starts with the founders, and they obviously get the benefit of angels investment. Amina, you've recently set up your EIS for your raise, so you've got fresh experience. Did you set up the EIS status for your company yourself?
No, actually. So initially, when I just found out about the schemes and I started researching on the HMRC websites and few tax advising websites, it was almost a little bit too confusing. I wasn't sure which one to go for, whether it was the SEIS or EIS, and what the process was. It was almost a bit daunting. And at that stage, I decided actually to use a specialist advisor that can help me go through the process, which, by the way, isn't actually that costly, and I would strongly advise that because it's time and money well spent. So I almost got like a small mini course on what the different schemes are, how it works, what's required. I got a checklist on everything that I need to provide for the application process, and it was very straightforward. And once we submitted, I think I had like the whole assurance coming through within 2 days. So it was super fast, no questions asked, nothing. So a really pleased experience from that perspective.
Yes. And that was Sarah who did that.
Yeah.
Yes.
Thank you.
Yeah. I think when you look at the HMRC website information, it's great that it there's some information on there, but it can look more complex than you need to know as a founder, as long as you have an advisor on board. Yeah.
I mean, one of the things that Sarah also advised on was which one to go for first, because initially, if you're raising less than about 150k, then you go for the EIS because it gives more tax relief. Whereas if you're later, maybe raising more money, you go for the SEIS, I think it is called, and that will give you a little bit less tax relief as an investor, but the capital you can invest is much more. So it's also knowing what to get at what stage. So
hi, Nicola. I don't know whether to just jump in. Sorry,
I
just wanted to add as well, this is my second business, and whilst the other one we didn't raise investment on or anything like that, HMRC picked up on that in the process of getting SEIS and asked a considerable amount of questions which we weren't expecting. So just as a sort of another reason to definitely get advice and not just do it yourself. There can be all sorts of hiccups, and they can be quite strict about not giving it out, which could, like we've said, stop you from raising investment. So get advice, basically.
But they are quite strict about applying the criteria, actually. And I think it'd be quite easy, I think, if you weren't familiar with the schemes, to kind of get quite sort of mired in that, in all the kind of detail on the various websites, because obviously there's HMRC's websites, but there's all sorts of other websites that have details of it on as well. And if you use an advisor, then ideally they should kind of ask you the key questions relating to your business, and then kind of cut out the other things that you really don't need to be concerned with, so you can just kind of focus on what actually matters.
Yeah.
Oh, can I just add, it's not when you're actually raising either, is it? It's also about maintaining that status.
Yeah, exactly. I mean, one of the things with EIS is actually quite easy for investors to sort of lose the relief through no fault of their own if the company does something, you know, a variety of things which can kind of disqualify it within the first 3 years. So yeah, having an advisor on board is worthwhile from that point of view, because the company needs to be advised of what it must not do. You know,
can you give some examples of what we must not do, please? Just for my benefit.
Well, I suppose the most straightforward one is EIS company can't be controlled by another company. So if you've got EIS shares and it's all been set up perfectly, that's great, you know, and then the company's sold to another company, then that's an issue. And obviously it's not any fault of the EIS investors, you know, in the first place. Yeah, I mean, there's various other ones around sort of share rights and things like that, which probably, I think it's probably a bit beyond what we're trying to get into here. But yeah, just make sure the company's being advised as well. Yeah.
I think that gives the investor confidence as well, doesn't it? If they're aware that you are seeking advice to ensure compliance is ongoing.
Yes. Yeah.
Because you can lose the EIS or SEIS status, even though it's been granted. You can lose it. I think there's some trip hazards on that if the shares are issued too closely together, or
yeah, I mean, the two easiest ways to mess it up, basically, the two kind of classic mistakes is one, if the shares have to be fully paid for by the time they're issued. So if a company says, oh, you know, we've issued, you know, these two people their shares, but we haven't got a bank account yet, so they're going to pay, you know, in a couple of weeks when we get that sorted, you know, that's the problem, because the shares have to be fully issued by the time they're paid. And the other classic one is issuing CDIS and EIS on the same day. CDIS is the one that comes first, and that has to be done at least one day before the EIS shares.
And am I right in saying that once you've started using EIS, you can't go back to using SEIS?
Yeah, that's correct. Yeah. And HMRC are very strict on that. There was a case a couple of years ago where somebody had actually accidentally put the wrong form in, and they claimed EIS rather than CDIS. It's a complete mistake. Then they went back and said to HMRC, actually, you know, we've made an error. Actually, you know, we wanted that shouldn't have been EIS. It should have been CDIS. And they said, no, you've now claimed EIS. That means you can't go back and claim CDIS. So they are quite strict about these things. So the whole thing needs a kind of a step-by-step plan of what needs to happen on what date. And it needs to be done really carefully.
Yeah. And if these things, those trip hazards do happen, the best thing is to talk straight away to your angels. We've come across that happen. And the best thing is to go back straight to your angel investors who thought that they were going to get SEIS, for example, and are getting EIS instead. Just have an advisor on board, ideally on first. But if you don't, and you come back and realise that actually there's a mistake happened, that those shares have issued in the same time, just go back to the angels and say it. Yeah. So if you're raising for Sarah, for founders, how long before a founder wants to raise do they need to start thinking about SEIS or EIS?
It's a bit of a balancing act, because as we've said a few times now, most investors will want to see the advance assurance before they will even really talk seriously. So you do need to have that, you know, in place. It's not compulsory to get the advance assurance, but you know, most people do, because investors really want to see it. Yep. So, you know, I would suggest planning that into the sort of project timetable. However, you don't really want to do it too far in advance. They don't expire as such, but they're issued for a particular raise, and they can only ever be granted based on the information, you know, at the time. So obviously, the longer period of time that passes between the advance assurance being issued and then the raise actually happening, you know, the greater chance that, you know, the assets of the company might have increased, or the trade might have changed slightly, or, you know, something could have happened that makes it no longer relevant. But one thing just to bear in mind is you do have to have at least the name of at least one potential investor to put on the advance assurance application. Right. It came in about 4 years ago, I think it was, because HMRC were basically being inundated by speculative applications. So they said, no, you need to have at least one potential investor to put down. So until you've got that person, you can't really do it. So it's a bit of a chicken and egg, but you just have to kind of find a way through. But as Amina said, at the moment they're coming back quite quickly. Certainly the kind of more kind of straightforward ones. So actually, it doesn't need to be a timing nightmare, actually.
Okay, great. And is it, so in terms of timing, talking of timing, is it for an angel a tax year end planning thing? Do angels need to say, I've got to invest in this tax year or that tax year? Is there a year end point for it?
I mean, usually the tax relief is for the year in which you make the investment. Well, the year in which the shares are issued. So today it's Happy New Year, everybody. We've just gone into the new tax year today. So obviously any shares issued from today onwards will be in the 2022 to 2023 tax year. However, you can actually choose, when you claim the relief on your tax return, you can actually choose to treat it as having been made in the previous tax year. As long as you've not used up all your kind of allowances and so on for that year. So each time a tax year kind of ticks over, then obviously you kind of one becomes out of time for carrying back.
Okay. And keeping on the founder theme, a big part of finding angels is about their right fit for you, so a good fit investor, and what that good fit investor looks like in terms of EIS. And so Nicola, you've raised recently, and a great point you mentioned was about this good fit investor and EIS. Can you tell me more about that side?
Well, I think it comes from the fact that it's really easy to fall into a trap when you're first raising on one of these sort of early stage schemes to just take money from whomever will offer it to you. And ultimately they're getting sort of fairly good benefits from the schemes. But as a founder, you're essentially building a team around your company. So, they've got a stake in the business. They have certain says in certain things, and you want them to be the right people. So you want them to align on your values, you want them to align on your strategy, and you want them to ultimately believe in what you're trying to achieve, and to support you as a founder, that if things maneuver or change, that they'll be there for to enable you the breathing room to make those sorts of decisions. So I think it's about making sure that you're sort of whilst you're pitching to lots of people and you're wanting to have them on board, making sure that they're the right person to have on board is like so critical, especially at early stages, because when you look to raise bigger rounds later on with maybe like VCs or institutional funding, if you have bad eggs on your cap table, then it will cause problems for you growing the business moving forward. So I don't know, I don't have like specific advice on making sure that they are the right fit, but I think values and making sure that they really believe in and understand what you're doing as well.
And when you're raising those conversations, they can take a lot of time. It's a lot of investment on your side to finding those good angels, and there's lots of conversations you're looking to. When you're talking about the purpose and the values aligned, you're looking to have a meaningful relationship with those angels and connect with them. And the key one is, because some investors you could be really aligned with them, but some investors will require that SEIS or EIS status. And if you don't have it, those could be fruitful conversations for potentially down the line, but also not so fruitful if you can't meet their SAS requirements. Did you find that was a key criteria? Did you find some investors saying, I need SEIS, not EIS?
Yes, some of our investors were SEIS investors and were sort of very early stage tickets, if you like, and that's what their focus is on. More recently, because we've just done some bridging and some top ups after our first round, and now we've reached our SEIS limit, so we're talking about EIS. Yes. And I suppose once you change the conversation from what you can offer, EIS is still a really good benefit. But there are angels out there that's because there was, if they'd invested in the first round, they would have got SEIS. They'll go and find another business that they like that has SEIS. So once it ran out, it was quite a sad day, because that's been quite a big thing for a lot of our conversations, or even opening up conversations as well, because in some cases, some of our investors it was their first investment. So that was a really great benefit for them to see that they could use SEIS. So it's quite sad that it's gone now.
Yes. Yeah. I think one of the key bits is, when you're having those angel investors, really find out what their criteria is as well, so that you can then progress those conversations with investors who at least you meet their criteria, and then you can invest your time as well, because it really it's important.
It's so time consuming, but you need to get to like a no or a like we don't fit like really quickly before you get into sort of the meatier conversations.
Yes,
I think anyway.
Yes. Jill, have you found that as an angel investor?
And Moot, absolutely, it's the team. That's the most important thing. You have to find, as Amina and Nicola said, that's the most important thing, that you can fit, that you can work together. And I think also that the founding team understand the benefits that angel investment can bring. Yes, you are giving up part of your company, but you're gaining so much more, and you're looking at it as a long-term relationship, because there will be follow-on rounds of funding, and you want a core group of investors who can see you through that journey. So I think it's very important that communication is kept open, and that investors and founders are working together, and, as you say, aligning interests and understanding each other.
So if we move to post-raise, so we've raised on an angel round, and we're in that post-raise phase. Sarah, what's the post-raise factors that a founder needs to think about as well?
Who's that one for, sorry?
Well, Nicola, or because you've raised, or Sarah from a tax point. Sorry, I've put both names on.
Oh, okay. Well, I can go from a founder perspective, I suppose. I think money goes quicker than you think. And no matter how sensible you are, you have a really clear cash flow forecast, and you track it weekly, and you look at every cost. It's surprising how many surprise costs come out of nowhere. So plan for that. And also, I think the communication piece that we talked around before, because you can, at the moment the money's in the bank. This is my first fundraise. I don't know if anyone else has ever felt this, but for me, it was like an overwhelming sense of responsibility and pressure above and beyond what I already felt. And now I had other people's money in the company to basically be a custodian of and grow, essentially. And they were believing in me to do that in an impactful way as well. So I think you need to recognize that it is quite a lot to go through to make sure that you're ready for that. And then to support yourself in doing that, I think the communication piece is really important, keeping on top of that communication piece to avoid letting things run away from you and that relationship. And also lean on your angel investors for support. If you've got specific asks, put them out in your updates. You literally don't know who could help. So I think always ask the question to ask for support. And there's also loads of paperwork, but I'm sure Sarah's going to talk about that from a tax perspective.
What I was going to say about post-raise is that don't get so excited that you forget to do the paperwork. Like I say, that has to start with the company anyway, really, not in individuals. So it's just it's one for the founders to keep on top of, really. But your advisor should be able to do that for you if you want them to. That's not a problem.
Okay, that's good. Okay, and so one last question on as an EIS one, is there any reason why you wouldn't do SEIS or EIS as a founder or an angel? Is there any reason?
Who's that to? Is that?
Sorry, Sarah.
Is that to me?
Yeah.
Well, I mean, really, from a tax point of view, there's not really any reason you wouldn't do it if it wasn't available to you. I mean, why would you not? You know, why would you not? But I think it is important to remember it's not all about tax. You know, you have got to be happy with the commercial investment you're making. You've got to be happy it matches your values. You've got to have assessed the risk of it not working, because although we said earlier, there's a loss relief built in, there is still some risk. So it's not just all about the tax relief. If you're not happy with all of those other things, level of involvement, which we've also discussed, then it might not be for you. I think it is important, but tax advisors have this sort of cliched saying, so don't let the tax tail wag the commercial dog.
Yeah,
it's important, isn't it? You've got to remember, you've got to be happy with the commercial side first, really, and not just do it from a purely tax driven point of view.
Yeah. And to close our panel part, before, if we've got any questions we come to, I'd like to ask all of the panel, and ask a different question to each. What has angel investment meant to you? So Jill, from angel investing, as an angel investor, someone who's done this for a long time and believes in it, what would you say to people considering investing?
I would say to think carefully about why you want to do it, what motivates you, what your expectations are of it. It's very rarely purely financial return. Very few investors go in it just for that. It's much, much more than that. It's incredibly rewarding. It's the excitement of being involved in startup businesses, people who are following their dreams, their passions, helping them to realize those dreams. Think carefully about the type of investing you want to do. Maybe you want to be involved in impact investing, which sector you want to be involved in. You also need to thinking about your overall strategy, how much you intend to put aside for angel investing, how much involvement you want, and then making it work and fit in with your own lifestyle and commitments. I've been involved in it for a long time, still very involved, and I really, really enjoyed the journey. There are a lot of people out there who are very prepared to share their knowledge. There are a lot of syndicates, groups, networks, and if you are new to angel investing, it's very easy to ask around, look on the UK Business Angel Association website and find a group or a syndicate that aligns with your own interests and values. Go along and talk to them, meet more experienced investors, and just get an idea of what's happening, go along to pitch events and just start to understand the whole process. But it's think about it, talk to people. It's all about people. We've all mentioned keeping the lines of communication open and getting the right fit. So it's who you invest with and who you invest in. It's all about the people, and it's an incredible journey. So that would be my advice.
Yeah. And Amina, you're raising for your business now. What does angel investment feel like it means to you, growing your business that's come out of a passion, your own passion and your own expertise?
Yeah, so for me, I think it's really important to mention that aside from actually getting the financial support which you need as a startup business, though we have been bootstrapping till this date, and we really have beautiful products that we fully believe in, it's almost like building a house in the middle of nowhere, and you need the right team, you need the right support, the tools to so from a financial perspective, of course we need that support, but I would say most importantly is the knowledge sharing that I would say. And it can be very daunting, it can be very sometimes as a new founder, you do wonder, and I think the support I get from angel investors, or that push, or them sharing their own experience and how a lot of them being previous entrepreneurs themselves, I think that's really what I found most useful, is the network of support not necessarily hand-holding, but it's good to know and share different views, or they have maybe seen a similar business that is doing tremendously well. So really, really important to have that kind of, which again boils down to the right fit. That we spoke about earlier, it can make a huge difference, not only to your confidence, self-esteem, push, planning. So
yeah,
I'm learning a lot.
That expertise for where they've grown businesses before is really helpful, and they've invested in you, financially, and they invest in you time-wise as well. Yeah, because often, as Jill said, you're investing not just for your financial return. You're investing because you've got a passion or a purpose connected with the business as well.
Yeah, as a matter of fact, just to add to, in 2 recent attempts, I actually was very close, to closing deals. But like you said, it's about following your gut instinct. And though sometimes you will feel, oh, it's easy to get, we need the cash, to go to the next levels. But if your gut feeling really tells you it's not the right fit, or if there's some warning signs you see, or the conversations don't flow, I would say just don't go with it, because I see much more than that initial investment. Like we said, it's a long-term relationship, and it really have to feel right.
Yeah. And Nicola, what has angel investment meant to you and your business?
Well, I mean, it's enabled us to build the product, because we raised pre-product. We'd sort of pivoted a service into a product or a platform solution. And with that sort of MVP one, we've had a number of early stage users, which have given us some really brilliant feedback, and it's allowing us to iterate. And essentially this raise, the goal was to hit the sort of product market fit criteria, which, to be honest, anyone can measure in whatever way you want, but we have quite specific idea of what that looks like. And it's allowing us to explore that and get feedback and give us the time and space to grow the business, essentially, that on a bootstrap would be really difficult because of it. Well, with technology building, it's very expensive, as probably many of you know. So yeah, that, and also I think, like, from a personal perspective, there's a couple of my investors who have now become really good friends of mine, and we go out for lunch, and I'm actually going to London after this to go and meet with a couple of them tomorrow. And it's just, we don't even speak about work anymore. We just go out for lunch and have a nice time. And that's really, like, great to, like, build a network of people that you genuinely get on with, and it's not all about, like, what drama are we facing today, or what fire are we putting out today, and the community element of it. And like Amina said, people just sometimes send you something out of the blue that's like, oh, have you seen this, or have you seen that? And there's people thinking about you and how you're doing, and that's a really great, like, way to run a business, I think, knowing that people have got your back.
Yeah, that's lovely. And Sarah, for people considering angel investing, what would you say to people considering it?
I would say, if you're interested in it, then go for it. It's just a case of finding the right business, isn't it? But everybody has passions, everybody has values. You're going to be able to find something that aligns with you and the type of business you want to invest in. I don't see any reason not to do it, really. I mean, everyone today has talked about how rewarding it can be, not just from a financial point of view. And you're really helping, aren't you? You're really helping a founder or a group of founders to grow a business around a meaningful cause. All the businesses we're talking about today are very impactful types of businesses, aren't they? So why not get involved? From that point of view, and then obviously the tax reliefs are fantastic as well. So I'd encourage everyone to go for it.
And from my perspective, what brought me to angel investing in a small way is, for me, is around equality, that we can use a small amount of funds to help build the businesses, that if we're investing inclusively and we invest in founders who reflect the diversity of society, then we'll build the businesses that solve the problems for a diverse society. And that's really important when we think about AI and the investment that can go in there, that if it's just solving the problems for a certain group, then there are many problems that are being underfunded at the moment. And that's primarily the female market, people of color, LGBT. There's investment opportunities out there that also create social change, and can, from an angel investing perspective, can have higher returns because there's underinvestment in those areas. There's less competitors fighting for market share. So from a financial perspective, but most importantly from an equality social change, that's what drives me. And I hope that we can have more angels and more founders coming together in small ways and making a big impact. I'd like to thank everybody for their time on the panel and ask if anybody's got any questions that they'd like to put on the chat, or raise your hand and I can unmute people if anybody's got any questions for any of the panel. I can't.
There's one in the Q&A.
There's one in the Q&A. Oh, there we go. Okay. David's asked, from an investor perspective, can the panel suggest an inclusive angel investment group? There are lots. So inclusive angels, we do invest individually inclusively. We're not a syndicate or do deal flow. We're more about the different actions we can take to invest inclusively. So the angel groups that are intentionally investing inclusively include Alma Angels, Angel Academy, We Are Radical, and Cornerstone Partners. I need to go to my list. I can put a list out on this recording as well of angel groups, and there are more and more people looking to be involved in and from an inclusive investment way.
I have a couple of angels on our cap table who are Alma Angels. So if anyone wants an intro into them, then if you want to get involved, or I can intro you to some of our investors who are in that group, then give me a shout.
Brilliant. Brilliant. I'm going to look for the list. There are more of them, and it's really important to find a group that you connect with. Stuart's asked a question for Sarah, please. Does the social investment tax relief work in a similar way to SEIS, EIS? Could I structure my social impact business to suit that relief?
Yeah, they work in very similar ways, actually. It's a 30% relief under the social investment tax relief. So yeah, they work in very broadly similar ways. Yeah.
Great. Okay. Stuart said thanks.
I think there's a couple in the chat as well. I'm not sure if we've got time, but
yes,
there's so many different things popping up at the bottom of my screen right now.
Okay. Is there a go-to guide of founders' responsibilities and the processes you have to go through step by step for a round? And how does that, and who does what? Founders, lawyers, accountant? That's a really good question, Claire. Sarah, as an advisor, would you provide that or come together with the lawyer?
In terms of a guide to who does what, I mean, I suppose there's no kind of rules on that really. As we said earlier, you can on paper do the the tax side of it yourself if you want to. So you're not going to find a guide that kind of says this person must do this and this and this. What I would suggest, I mean, I'm always, you know, when I work with people, I'm always happy to have an initial call and we would chat through what level of support they need. And I might say, well, actually, you know, I can help you with this and this. I have lawyers who I work with who, so if they need, sometimes it's something like a shareholders agreement or something like that, you know, we might get a lawyer involved to do that. So it really is sort of tailored to the company. But if anybody wants to talk about kind of what, you know, who should do what, I'm always happy to have a chat to kind of say, well, actually, you've already got this in place, or, you know, your own lawyer can do this for you, you know, to make sure you're not sort of doubling up on work. But there isn't really a kind of definitive list of who has to do what.
Great.
You can speak to Amy about your accounts as well.
Yes. And we have been asked on that question on how do you get in touch with the panel members. So on what I'll do is circulate, if everybody's okay with that, emails for getting in contact, because absolutely that's there are some, Sarah's business has advised lots of angels and founders, and Amina and Nicola's businesses are great ones for both investing in, but also in terms of buying from as well. So, and Jill, I'm not sure if you're looking for more people for your research, but we can talk about if you want to circulate.
Happy to share, definitely.
Yeah. Yep. Okay. And so we've got another question about online pitch events that you can attend. Is that as an investor or as an angel? Because there are ones for both, which you can go to. Some of the angel groups, you can join their pitch events, but as a founder, by applying and going through their process, they have a bit of a filter and they help you get ready. So really that filter is about making sure you've got the right information in your pitch. And then you can also go as an angel, and usually you can self-certify as an angel and then go along to those pitch events as well. And there are, go on. Yeah.
I was just going to add that most of the groups, somebody can go along as a guest for the first couple of meetings just to get to know people and understand and meet people within the group before actually joining.
Yeah.
Yes. Introductions if anybody wants to contact me, certainly.
Yeah. And lots of the events are both streamed online and in person at the moment. Hopefully that will stay like that, because it's a great way for people to be able to join if they're not in the country or in the location, because it can be quite time consuming to go. And some of them are recorded as well, which is really good. Yes. Great. And have we got any more questions? I think I'm going through both the Q&A and the chat, and I think we've got them all, but if anybody's got some more, please put them on. Great. Thank you very much, everybody, for your time. Really appreciate everybody in the panel and everybody attending. Thank you very much. And we will circulate the recording, and feel free to pass that on, and we'll circulate the information about the inclusive angel groups, and we'll circulate information about contacting Sarah for Allegro Tax, Jill, Nicola for Views for Change, and Amina for trademark to be announced. And please keep in touch and keep thinking about inclusive angel investing. Thank you very much, everybody. Have a good day.
Thanks, everyone.
Thanks.
Bye.
Thank you.
Bye.
Bye.
Bye.